All right, so Rick Reeder talking about uncertainty, looking at corporate data. But first, I want to ask you about some economic data. We get PCE later today. We get the jobs report a week from today. Do these two reports, in your mind, do they add to the uncertainty or do they actually answer some questions?
Well, the jobs report next week could certainly help answer some questions. I think one of the biggest questions that we have and others is whether this environment of uncertainty is part of the cause of the slowdown that we seem to be seeing from the consumer. If the jobs numbers come in healthy and continuing to expand payrolls, and we see later in the week with the JOLTS numbers in terms of wage gains and things like that, you have a consumer that has the potential to spend. And so they may just be holding back because of the environment of uncertainty. So that's really what we're looking for. That payrolls number is going to be very important, as is some of the commentary coming from corporates during earnings season.
Now, what about PCE? Are you expecting to see signs of tariffs raising inflation? And could that potentially spook the market because it may delay the rate cuts I think a lot of people are waiting for?
I think that is a big concern over the course of the year. PCE is probably going to come in at a figure that would be okay as far as the Fed's path to slower inflation eventually. You know, it's a long path to 2%. That's going to get very messy and chaotic as the year goes on with assessing the impact of these tariffs. They will be one-time adjustments. We don't think they'll be massive enough to move the Fed in the other direction, i.e. rate increases, but it will extend the process of Fed rate cuts, and that's going to be another challenge as we work through the year.
All right, we're certainly going to continue to talk about that until May when the next Fed meeting comes. I want to talk to you about tariffs and how you see them shaping the market. Right now, it's very interesting to note that two auto parts companies are hitting their all-time highs. I'm talking about O'Reilly and Autos, and we're actually going to talk more about those later. But what does that say about investors, the fact that they're trying to invest in two companies that I guess is a way to hedge the idea that people won't buy as many cars, are going to keep their cars longer? What other parts of the market do you see being shaped by this concern about an economic slowdown and tariffs?
Yeah, that's one of the really challenging things in this environment. You know, people are trying to get out in front of what the changes might be, how long they'll last, what the impacts are. We saw it yesterday also with the rental car companies and that same sort of arbitrage of new car versus used car going on. It makes for a very challenging environment in the short term. We think that overall, though, the story of this year will really be told by the economy and how earnings come through overall. There are some sectors that we think have some potential for great profit margin expansion, and that's really what we're looking to, because the noise on the tariffs could change at any point, and those stories could reverse themselves just as quickly. So we're trying to be very cautious around the day-to-day news flow.
Well, I mean, you're just talking about profit. Right now, we're showing the Q1 estimate for EPS is just over 7%. Is this market still priced to perfection? Do we need to really be worried about this earnings season? I'm looking at the forward PE from LSEG. They say it's 21 times forward PE. Is this still priced to perfection, or is there some room for profits to slip a bit as we see these the uncertainty due to tariffs and in the economy and with consumer spending?
I think we're right on the edge of that. So PEs have come down a bit as the year has gone on, partly through price depreciation and partly as, the earnings season, from last quarter was pretty solid. We'll see how things unfold for this quarter. I do think it's a quarter where we're susceptible to those issues where any misses without a good excuse are going to be punished pretty severely. So expectations are still running pretty high in terms of what's embedded in that PE. We'll be looking to the qualitative side as well. If some of the disruption or misses on earnings are just due to simply the noise of the environment, and there's an expectation that, once we get tariffs in place, once we know what the policy backdrop looks like, then you can have a better environment going forward. And so I think that storytelling from corporates is going to be really important here in earnings season.